Welcome to Football and Finance, Winning the Wealth Game, powered by River Rock Financial Group, with your host, Max Wiltz, where we connect the discipline of the gridiron with the strategies to build wealth. Let's get ready to tackle your financial future.
Hey, what's up, everybody? It's Max from River Rock. And I want to talk a little bit about a thing called leverage. And the reason why this is important is because the rich continue to use leverage via life insurance. There are other leverage mechanisms or other leverage financial tools you can use. The biggest reason the rich continue to use leverage through life insurance as one of their main strategies is because it allows for tax-free accumulation, and it also allows for a tax-free death benefit. And you can also tie it to several other things like key person insurance, mortgage protection insurance, index universal life policies, which also utilize or use the stock market indexes. They can also tie it to life settlements. It also has the benefit of living benefits. And I've covered that in a separate video, but leverage is the ability to use something small to gain a large advantage over time. And that's the biggest key. Using life insurance to gain an advantage over time. And this is why it's so important to understand this concept. So let me go to my visual representation here. Share my screen. So if you think about a seesaw, and our definition here is using something small or existing to gain a much larger advantage over time, advantage or influence over time. So essentially, when you pay a small premium for a larger amount of a death benefit, on top of having cash value accumulation, on top of having the tax-free accumulation of an annuity combined with any life insurance product, then what you're doing is over time gaining a larger advantage. I know some people may discuss or want to have a vigorous debate over other types of leverage. Like, for example, owning a home. Well, the reality is, and this is another topic for another day in detail, but the reality is when you quote unquote purchase a home through a mortgage, you really still do not own the home. You own the note, and you own a piece of paper with a mortgage on it saying that you owe the bank for the money you borrowed to pay off the home. And on top of that, additionally, let's say you paid your home off. You still owe property taxes in perpetuity, or in some places until you're like 88 or something like that. But when we talk about leverage, when you think of life insurance, think of leverage. And the reason why probably every wealthy person or rich person that I know uses leverage through life insurance, because you can also attach it to your trusts. You can put it in the trust, place the life insurance in a will. You can distribute it over time. You can distribute the proceeds how you see fit. Also, you can access the face value. So if you had a $1 million life insurance policy, $1 million, and you paid, I don't know, if you started the policy or your parents started it for you, and your premium is a couple $100 a month, right? Then you're not going to accumulate $1 million by paying $300, $400, $500, or putting $300 or $400 in a savings account for however many years. It's going to take a very long time to accumulate $1 million. Just paying $100 or $200 premium every month. Even if you had a $500,000 policy, a term policy, and you were paying $70 a month, still not going to accumulate to $500,000. So that's how you have to think of life insurance, the leverage you're using to accumulate this cash benefit, whether it's to you while you're living or it's to your beneficiaries when the time comes. So another important point before I stop. Let's say you had mortgage protection insurance or a mortgage protection life insurance policy, not to be confused with private mortgage insurance. This is another way to use leverage. So private mortgage insurance protects the mortgage company, not you. Mortgage protection insurance protects you and your beneficiaries. Usually mortgage protection insurance policies have what's known as living benefits attached to them. Therefore, if something were to happen to you, a disease, illness, accident, and you were not able to work, then the life insurance policy would do several things to make sure you had cash in the bank while you're alive. And on top of that, still have a majority of that policy in force when the time comes for your beneficiary. So, and you're just paying 30, 40, 50, let's say you've been paying $100 a month. Then the mortgage protection insurance policy will be a form of leverage that you can use while you're alive and for your beneficiaries. So hopefully this was valuable to somebody. And if you see fit, no, please follow me, like on Facebook, YouTube, TikTok, Instagram at River Rock Financial Group. For more information, reach out through direct message, or you can call the office number at 470-748-0524. And until next time, do what's difficult while it's easy.
Thanks for listening to Football and Finance, Winning the Wealth Game, powered by River Rock Financial Group. Remember, every great play starts with a solid plan. Until next time, let's keep winning on and off the field.